Hey everyone, welcome to Trash or Stash, our newest segment where we take a popular stock, strip away the hype, and decide if it's worthy to be stashed in your portfolio for massive future gains or tossed into the garbage pile.
Good.
This week on the chopping block is baby's first trading app, Robinhood, ticker symbol HOOD, H-O-O-D. Last week, this stock was trading 83% lower than its August high, and then the bargain hunter started sniffing around and it popped 25% higher. So, are we looking at a future giant of the financial industry that's on sale? Or are we looking at just another buzzy tech startup destined for the trash? Let's find out in this week's Trash or Stash. All right, my future millionaires, listen up. You've heard Robinhood's spiel by now. It's the selfless trading app seeking to introduce a younger generation to trading and investing, all with zero commission fees. Since its launch in 2013, the app has attracted a new generation of investors and has coerced some of the major financial institutions into dropping their fees to remain competitive. I mean, it looks pretty encouraging on paper, but lunch expert Milton Friedman once said, "There's no such thing as a free lunch." So here's the gig. Robinhood makes its money by selling the right to carry out your trade to these guys who are called principal trading firms. So in other words, a principal trading firm pays Robinhood to see their order flow. And by receiving money to see your trades, Robinhood makes more than enough to offset their zero fee trades. So the problem is, trading firms execute trades in order of ascending price. So what that means is, if you're the little guy, you get the fill prices. Now, case in point, the SEC calculates that investors missed out on $34 million over a 3-year span by trading with Robinhood. And that's all to duck a couple of measly trading fees.
No, I'm a ball on the budget. If I got, I paid all my bills up, and if I got a little change left over, we'll do something.
The SEC hated this so much that they slapped Robinhood with a $65 million fine. Okay, so that's a little shady, but then along came this meme stock craze, right? During one of the weirdest periods of trading I've ever seen in my lifetime, every basement genius with their desks full of empty Red Bull cans were downloading Robinhood and buying as many shares of GameStop and AMC as they could possibly afford. Unfortunately, you can't build a sustainable business model by relying on government stimulus checks and DoorDash orders.
Rude.
But even after all that insanity, Robinhood is still struggling. In Q4 of 21, they reported a pre-tax loss of $420 million. Monthly active users fell by 1.6 million users, while revenue from crypto, in their words, quote, declined significantly. And this shines a glaring light on one of the major problems for their Fisher-Price jungle gym of retail investors' business model. While the company was one of the first big financial platforms to embrace crypto, it's become far too dependent on the success of gimmicks and, doggy coins. Even after the meme craze of a lifetime, Robinhood still can't get their life together.
I'm trying.
So say what you want about the stuffy Wall Street banks like Goldman Sachs, but at least their performance isn't tied to digital currencies or meme stock crazes that swing harder than Will Smith's open hand at the Oscars.
Oh, wow. Wow.
Now, I admit, Robinhood, they continue to innovate. Just last week, in an attempt to stem its hemorrhaging user base, Robinhood beefed up their trading day by adding 4 additional hours of trading. So that brings Robinhood in line with rival brokerages like Charles Schwab or Interactive Brokers and Fidelity, who also offer extended hours trading. But the company upped the ante even more, saying that this was just the first step to a 24-hour trading day. Now, look, I love trading, but I'm also not a freaking psychopath. I mean, if I could trade for 24 hours a day, I would lose my ever-loving mind. In order to bring 24-hour trading, Robinhood would have to change the law or find some giant gaping loophole to exploit. But investors don't really think about these things. On that news, they piled into Robinhood and they spiked the shares of Robinhood 24% in one single trading session. Now, I could talk about Robinhood for hours. We haven't even touched on the class action lawsuits, the trading restrictions that the Reddit groupies are still pissed off about, the security breaches, or its ongoing trouble with regulators. But it all boils down to one simple question. Do all of Robinhood's bells and whistles add up to an industry disruptor, or is it just a cool app with a couple of neat features? Wait for it. Well, come on. Who do they think they're fooling? Robinhood is fine for what they are, which is basically a gateway drug into the world of investing. They're like the White Claw equivalent of your very first sip of alcohol.
I don't really know what seltzer means, but it sounds rich.
Or if you're, older like me, they're like your first Zima with the Jolly Rancher at the bottom. Eventually, Robinhood traders will put on their big boy pants and start investing and trading for real. And when these basement dwellers grow up, they'll move on to legit trading platforms like Schwab or Interactive Brokers. And when that happens, the only ones left on Robinhood will be the Gen Zers and their weird memes. Call me the Sheriff of Nottingham because I'm throwing Robinhood into the trash. Hood is the loser, while an established company like Charles Schwab will be a beneficiary worthy of stashing away. And there you have it, your latest Trash or Stash episode. If you like this episode and you'd like more Trash or Stash picks, then drop me a note below on which stock you'd like to see profiled next. Nothing is off the table, so feel free to go nuts. And if you want to know our best pick, one to stash right now, then click or scroll below because my partner Karim, he's calling this one stock, which is trading for less than $2 a share, the best value play in all of Wall Street. He explains why this stock could move from $2 up to $20 and still be undervalued. This is one to stash right now. So click below to see Karim's presentation and get this ticker symbol. And on that note, I'm Brian. Stop hating, start trading. I hope you like this episode. See you next week and cue my exit music.